Welcome to the October 2022 real estate market update for the Phoenix metro area. For a look at things nationally, let's start with interest rates and all the headlines about interest rates. Here's a look at the 30-year fixed rates from Freddie Mac. They rose for the sixth consecutive week. Interest rates have been rising since the beginning of the year. And then we saw this very sharp incline just over the past few weeks, a very rapid rise. Looking back, we can see that the rates were an average of 6.7% for the data that was released at the end of September. And we've seen that increase to well over 7% interest rates in the past few weeks. The common question now is, why are rates going up so rapidly? Well, this is a quote from Odetta Cushy from First America, and it sums it up well. The aim of the Fed's tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. Well, builders have cut back production in response to rapidly declining affordability. And the annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. And that is the reality that buyers and sellers are facing right now. The effort to bring inflation down to slow the economy is having an impact on mortgage rates. Rising mortgage rates have slowed the pace of sales, and at the same time, it's created more inventory and more options for buyers. So, buyers who may have been outbid more times than they can count amid the frenzy of multiple offers scenarios of the past, well, there's now an opportunity for buyers. And at the same time, on the flip side, is the affordability challenge. As mortgage rates rise, home loans become more expensive. This is why a trusted, skilled lender is absolutely critical. We've seen buyers who a lender was unable to qualify, and yet another lender was able to find the right loan product and rate and successfully close on a loan that other lenders were unable to. While demand is not as high as it once was, there is still demand. And that brings us to home prices in a time of uncertainty. As Dave Ramsey reminds us, the root issue of what always drives house prices almost always is supply and demand. This graphic, the supply and demand ratio, is a measure of showings, which is demand, and active listings, which is supply. Showings are down nationally just over 12%, and active listings are up over 27%. Very, very different from the last couple of years, and that's an inflection point. Here's a look at the 2023 home price forecast. Now, Zellman is calling for depreciation, while Fannie, Freddie, MBA, and NAR are calling for 4% appreciation. The average of all these forecasters, including the depreciation forecast, is about 1.8% appreciation. So, best case scenario is probably around 2% appreciation in home prices. That brings us to an important reminder around the question, should I buy a home right now? Home ownership is truly a long game, especially when compared to renting and equity. This quote from First American points out that US households own 41 trillion in owner-occupied real estate, just over 12 trillion in debt, and the remaining 29 trillion is in equity. So the national loan to value in Q2 2022 was 29.5% and the lowest since 1983. Homeowners have an average of $300,000 in inflation adjusted equity in their homes in Q2 of 2020. That's an all time high. This is the percent change in home prices as of Q2 2022 going back to 1991. So a 30-year look. The national average home prices have increased by 290%. That's why homeownership is the long game and wins over time. Given all the ups and downs that happened along the way, home prices are up 290%, in some places, significantly higher than that. The alternative is to rent, which has also skyrocketed over that same period of time, roughly the 30 years. Monthly rents have increased exponentially. So, a good thing to consider when asking, should I buy or rent or should I buy now? You can put all of that money over time into rent and not get a return, or you can invest it in home ownership that protects the monthly payment and provides a return on investment.
And now let's take a look at our local Phoenix area. Now, we all know that numbers have changed pretty drastically in the last year, comparing last year to this year. So, we're going to stick to just month over month. But if you are curious to what those numbers were last year, then I encourage you to take a look at any of our previous market update videos as they highlight those numbers from last year to this year. So, let's start with active listings in the under $300,000 price point. Last month, there were 1,363 active listings, and that has jumped up to 1,615. In the $300,000 to $600,000 price point, it went from 10,847 to 11,618. 600 to 800,000 went from 2649 to 2648, so one less listing than last month. 800,000 to a million went from 1121 to 1189, and a million over 1893 up to 2024. Price per square foot under 300,000 went from 199 down to $192. The 300 to $600,000 price range went from $247 a square foot down to $244. 600 to 800,000 went from $278 a square foot up to $282. 800,000 to a million went from $311 down to $307. And finally, a million and higher went from $458 up to $489. And finally, days on market for the under $300,000 price point went from 39 up to 45. The $300,000 to $600,000 price point went from 45 to 53. 600 to 800,000 went from 52 to 49. 800 to a million stayed at 53, and a million plus went from 59 up to 61 days on the market. And there you have it, your month over month local market numbers.
That's the Phoenix metro area real estate market update for October of 2022. Thanks so much for joining us, and we look forward to having you back again here next month.